Yo, what's good, y'all? It's your boy Chak Investing back here with another weekly review of NQ and ES. So this is a higher time frame breakdown of what is happening on NQ and ES. And the reason why this is important, stick around for this. The reason why this is important is because this is going to help you develop your daily bias that will help you in your short-term trading. Very important for you to follow the series. As a reminder, on this channel, we trade the ICT 2022 model. I have several videos teaching you about that model and one of the best times to enter, etc. But this is a series where I'm going over on a weekly basis what my bias is for NQ and ES. Okay, and this will help you on your shorter term time frames when you're trading the ICT 22 model. If you don't know what that is, feel free to go check out the video that is at the end of this particular video. If you make it to the end, I will link that to the end, and you can see where I've taught this strategy. For me, it's the easiest strategy to look at. Literally, ICT says that if he could teach his daughter one simple strategy, it would be this. He said in the ICT 2022 mentorship. So, that is definitely a good series to watch. But this, we're going over weekly NQ and ES. This is basically going to help you in determining daily bias and higher time frame bias that will inform your shorter term trading. Like I always say on this channel, higher time frames trump lower time frames. It's very important to be aware of what the weekly and daily levels are, having those on your chart at all time, because it'll help remind you what the true draw on liquidity really is. All right, so let's go over what we're seeing on NQ and ES right now. All right, so first thing I want to know is look at ES. This is ES right here, and this is NQ. What do you notice? What's one thing that is very obvious that you can notice? Right. Pause for a second. All right. To me, it's the SMT at these highs. Right. Very, very obvious. SMT between ES and NQ, where ES took out this high, NQ failed to take out that high. It's weaker, right? And so we should be seeing some bearish price action given that we're respecting this weekly SIBI, right? This weekly SIBI, sell side imbalance, buy side inefficiency. For the past 3 weeks, we have been inside the weekly SIBI and not really making any definitive candles, closing through the consequent encroachment or closing above it, but kind of just been, inside of it. You can see that we barely closed through the consequent encroachment on 2 weeks before. We mohawked over it. And now this week, after 1, 2, 3, fourth candle, we are now expanding away, closing through the consequent encroachment of this particular wick, right? We close to the consequent encroachment right there. And we also, we've also taken out the previous week high and the previous week low. So this is a classic reversal sign, right? So when you see that we've taken out the previous candle's high and then also the low, it is a strong indicator that price is going to reverse. So my eyes now go towards this weekly low right here, this low right here, maybe returning back into this weekly buy side imbalance, sell side inefficiency, that BISI right here, this fair value gap. We could see ourselves coming back into that next week and possibly taking out this low right here. And then maybe, in the election season, we could even see this low get taken out and return back to this rejection block. And maybe finally take out these relatively equal lows below here. If we get some really bearish price action, we could see ourselves going all the way down there. Now, that's what we've seen on the weekly in this candle. Also, we also had a TGIF where, on a Friday, if prices expanded all the way throughout the week, Thursday we close lower. Friday, you can see us return back to 20 to 30% of the range. So you can see that we actually did close inside 20 to 30% of that range. That's actually what this green box is right here. It's at TGIF level. So you can see that we closed inside that. That is what we call TGIF. I can do a separate class on that, but that can really help inform your trading, because on a Friday, when you've seen yourself expand away, this could be a good draw on liquidity. A good sense for drawing liquidity where you think it's price is very likely to go back to, right? All right, so on the daily, what do we see this week? On the daily, starting from Monday right here, Friday last week, we had this big wick right here form right here with this kind of doji looking candle. Price did not get through the consequent encroachment on that on Monday. It was a pretty choppy Monday day, where we had a new week opening gap right here. And the next day, Tuesday, we expanded right? Because this is a volatility filter candle, right? Where price did not close, price did not reach the previous day's high or low. And so the next day should be an expansive day where we're taking out the previous day high or low of this candle and also taking out this candle's high or low, right? Which we see we did here. Or if that didn't happen, we can consolidate for at least 2 to 3 more days, right? And so we did expand on this candle, took out this high, and then at the top of this CIBI, daily CIBI right here, that's what this level is. This is a daily CIBI that is nested within a weekly CIBI right here, which also explains a lot of the choppy trading that we've been seeing past couple weeks is because of, we're in these higher time frame levels. We're near the election season, like very likely for price to just consolidate. It's going to be hard for price to really get through this level. And so we've just kind of been, filling in smart money orders inside this inefficiency. Now we're finally expanding away where you can see that we closed to the consequent encroachment of this daily CIBI. And the next candle, we came back through that daily CIBI and then traded down through this daily BISI right here from this high to this candle's close because there's a volume imbalance here, right? So it's not just this low to this low, it's actually this entire thing. You got to include the volume imbalance. And that's just like a fair value gap kind of tip that you should know, taught by ICT. Plus, we have SMT on the weekly, right? And we have SMT here on the daily too, right? So this high did not get taken out by this high, but we can see that this high did take out this high, right? So now we have 2 points of SMT on the weekly and short term here on the daily, screaming bearish price action, where the next couple of candles should really just be tanking, would be my kind of hypothesis here. So Wednesday, we made the high of the week, reversed lower, closing below the previous week low right here. And then Friday, we're trading back up into the TGIF range. On the 4 hour, what do we got? So starting from Monday, which is right here. All right, so this is Sunday's open. New week opening gap right here. Price goes away, reacting from this 4 hour BISI right here. But we do not make it above this high because the drawn liquidity is back to the new week opening gap. And if I'm bullish, on a Monday, you can see us retrace lower anyway. But, coming into the open on Monday, we reversed, closed in this fair value gap right here, and then found resistance at this bearish order block that formed, and then traded down to this new week opening gap, hovered in that until about Tuesday AM session where we expanded after consolidating overnight. And keep in mind, by the way, like you see how we didn't move that much overnight, and so we had pretty good price action coming into Tuesday, versus here where we expanded a lot, overnight here, but then coming into the AM session, we moved just about like around the open and then just chopped around for the rest of the day. So that's why, especially on a Monday with no news, and we had a large move overnight, trading can be really, really choppy. But on days where prices have moved too much overnight, you can see expansions happening in the AM PM session here, where we finally take out these relatively equal highs. This is the previous week high candle right here, and we are hovering over the daily CIBI high right here, forming a bearish order block at a premium level after purging liquidity. And we now form a propellant block. Price comes back, immediately rebalances, finds support at this inverse fair value gap right here, not even making to this bearish order block, goes lower, closes below the consequent encroachment of this candle, goes lower here, taking out this low, now making it a bearish order block, making this move a bearish order block. Price continues to gap lower, and then this is Tuesday coming into Wednesday. Wednesday is just all dropping. Wednesday's just all drop, right? And then coming into Thursday, at the open, we retrace back into a 4 hour fair value gap after forming a ICT 22 model, right? If you don't know what the 2022 model is, I teach that a lot on this channel. Again, I'll be teaching that on. I have a video at the end of the video here where you can go watch that. As a reminder, please make sure you like and subscribe, by the way. If you like this video, you know what I'm saying? Like, if you're learning a little bit about bias right here and, why to expect certain moves, make sure you press that like button and press the subscribe button. It's just a nice thing to do. And I believe that you're a nice person. So just do it. Thanks. All right. So we continue here, breaking market structure, leaving fair value gaps, and then we take this high took out this high. So this is a 22 model right here. Price comes and only returns into this discount fair value gap. Does not retrace higher. And the reason why we don't retrace higher, I don't anticipate that happening, is because, first of all, we have several PD arrays in the way that would get us from going back up there. So look at this daily inverse fair value gap right now. All right, this is the daily BISA I talked about. That's in the way of coming back up here. Plus, we have that S&T on ES versus NQ, and you can just see large expansions of that price, really like leaving a lot of breakaway gaps and not really actually trading back into a lot of SIBIs on the 4-hour. You can just see price continuing to go lower because of that S&T. Price can expand away. Plus, we're in the weekly and daily SIBI levels. Like, you know, these are premium levels on the higher time frame that are very strong, and that price is really rejecting from on lower time frames, right? So not surprised that on Thursday morning we came in and tapped this fair value gap SIBI, not closing above it, but just immediately wicking past it, giving me very, very bearish price action. So I would have been looking ideally for shorts for the rest of this day. Price comes out, eventually takes out the previous week low, and you can see that from there we kind of just chop. Coming into Friday, not too much good price action out here on the 4-hour. We create 2 bearish order blocks. This is a propellant block here. And then, we trade back into this 4-hour fair value gap SIBI and then close on the bottom portion of the TGIF level, right? So we're closing around that 20% level right there. And last time frame that we'll go through here, this is just a weekly review on the 1-hour, right? So starting from Monday over here, right? New week opening gap forms, price expands about 150 points overnight, consolidates coming into London, and then we take out this high right here. We form a bearish order block. Price taps the near the open, taps that open right there, comes down, forms a propellant block coming into 9 a.m. 9:30 open. 10 a.m. we come back up here, we touch the lower half or the wick portion of this bearish order block, and then come down lower. And eventually fill in this new week opening gap right here and fill this daily BISI as well. Break market structure and London right here, right? London, we go higher, break market structure, but then we come back down about the 9:30 open and take out this liquidity here and then expand higher, break market structure here on the 1-hour, right? This is also a 22 model. So if you are trading the 1-hour, like you're doing swing trading, you're not necessarily like trading lower time frames. You can also find 22 models on higher time frames as well. So let me just like quickly go over 22 model, just like so you can see what I'm talking about. Anyway, it's here. So low, high, lower low than this low, purges liquidity, breaks market structure by going above this high, leaves a fair value gap. On this so once we form the fair value gap, on this candle right here, as we come back down, right? Like usually I would wait to enter at least in the fair value gap, or you can enter here. But because this is such a large expansion, this can act as a breakaway gap sometimes. Like this PDA is over to the left where price can just like tap that. Like let's say for example, I believe it's the consequent encroachment of this wick. We have this wick over here that price like is feeling to get through and leaves this gap open. So you can, as you come back down, you can buy in the lower half portion of this wick over here, and at least the consequent encroachment of this wick on this candle, right? And then put your stop below the breaker right here, and then aim after you've taken out these relatively equal highs, aim for the previous week high, and then maybe a little bit above the daily SIBI. What would that look like on a 1-hour, right? So let's say you enter like right here, your stop is below this breaker right here. Usually I aim for at least a 1 to 3. We don't really quite get that, because we're in this daily SIBI, still in this previous week, like, the weekly SIBI as well. Like, we're probably not going to get that much expansion unless we're truly bullish. So maybe like aiming for a 1 to 2 could have been nice. I usually like to aim for at least a 1 to 3. But once we got to the halfway point, I would take off half my trade, put it to break even, and then let the rest ride. And then you see we just came shy of that 1 to 2. Usually like on candles like this, when you're so close to your TP, like I take off most of my trade because there's a lot of times where I just see like prices and like I'm not trying to aim for perfection. I'm not always gonna get that 1 to 2 exactly. So you can't have OCD. Like just pull out. Or like you don't have to pull out, but like take out like 90% of your trade and leave one contract left. And if it hits your TP, good. But if it starts reversing back on you, like and it comes down to break even, you've already taken out 90% of your trade. So 90% of your trades achieve that 1 to 2. You're basically making as much as you have made if you had 100% in, right? So I like to take at least some of that off. We reverse coming back into Tuesday overnight, London. Tuesday, Wednesday, London. We come back into the fair value gap here on the SIBI, reject lower. New York, we have a Judas swing back up into this 1 hour SIBI right here, and then reject lower. This is when we formed that SMT on the 4 hour, right? So now I'm looking for bearish prices. Price goes lower, 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 gaps lower into Thursdays. So this is the new day opening gap on Wednesday going into Thursday. We gap lower. We're just showing really bearish price action. Like, right, we like barely come into the constant encroachment of this particular SIBI right here. Price just continues to gap lower all of Thursday, right? Wednesday overnight. All Wednesday we just dropped, right? And then Wednesday overnight we continued to drop. Very large point, very large movement overnight here. And so when I saw this large movement overnight, I'm coming into the AM session like, okay, we can have one of two things. If there's news, we could still see expansion, but like it could just be a continuation of this play or a very sharp reversal, or we're just going to consolidate. And so I'm waiting to see what price is giving me because we have that S&T on the higher time frames, because we have all this liquidity here and we've taken out everything above here. Like, and yes, we have relatively equal highs over here that we could have targeted, but we're in these daily and weekly premium SIBI levels, and we have liquidity below here and liquidity below here in the previous week low. So, you know, I'm waiting to see what I get. Like I would need to see a very bullish market structure shift on the 1 hour to like then switch my bias. But as long as we're still respecting premium arrays on the 1 hour, like I'm very bearish, right? So price is coming here. We get into this 4 hour SIBI level. This right here, these two lines is a 4 hour SIBI. We wick into that and then just expand lower Thursday morning, and we finally take out this previous week low. Right, so you can see in MMSM, right? This is the MMBM side of the curve, MMSM side of the curve. Price finally completes that MMSM, and we could like by taking out the previous week low, and we just consolidate chop for the rest of that Thursday day coming into Friday. Thursday made a low of the week, so now we are returning back into the TGIF range, right? Over throughout the Friday AM session, and then kind of just trickle off Friday PM. All right, from this 1 hour fair value gap. It's also a 4 hour fair value gap as well, SIBI. So this has been the weekly NQ ES review. Yeah, we primarily focus on NQ. I use ES supplementary. I only like to trade ES if it's really moving faster than NQ, which just doesn't happen very often in my opinion. But yeah, if you like this, press the like button, subscribe, and I'll see you guys in the next video. Peace and love.